Hey, I'm gonna tell you right now, if you all are not invested in uranium or nuclear energy, y'all are asleep at the wheel. This is an opportunity of a lifetime. And this isn't gonna be a sensational podcast episode or anything of that nature. I'm gonna break some hardcore facts to you all. But we're gonna get to that right after we get to the intro. So y'all stay tuned.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Here on this channel, we focus on changing financial trajectories and building legacies. And we do that through assessing information, thinking, acting on that information. So you got to have action, right? So that we can prosper. So that's what this channel is about. And I hope that you all enjoy this episode. If this is your first time, be sure to hit the like button, hit the subscribe button. That is always appreciated. And if you're watching with me, be sure to comment so that we can engage with each other. So we're going to get into some important information today about uranium utilities and such, because I started doing some more research over this weekend and started diving deeper into this. I have some more videos coming out based off some of the things that I've read and things that I've absorbed over the weekend. But this is the investment opportunity of a lifetime. And I truly believe that. I mean, obviously, the stocks have ran up this past week and such, but I think that there's a lot further upside to go, a huge amount of upside to go because of the supply demand fundamentals. So we're going to go ahead and jump into a couple articles today. One is an article from Cuppy. He is a financial investor and such. And so we're going to go ahead and look at this article. He was recently at the World Nuclear Association Symposium, and we're going to look at what he noticed while he was at that symposium, because it is makes it even more bullish. All right. So here we go. Let's get it. All right. So now you're looking at this article from Cuppy, Cuppy's Corner. And pretty much, I mean, he was at the World Nuclear Association. I watched a interview with him and another gentleman, Mike, who is a very important investor in uranium and has been for a long time and has been through these different waves of the supply and demand fundamentals and cycles and such. And so this was a pretty good article based on that, not necessarily based on that interview, but based on that experience that he had. So he talks about The Big Short. The Big Short, if you all haven't seen it, it's a great movie. I actually reached out to this guy here, not the actor, but the guy that's portraying him. His name isn't Mark Baum, but hopefully he responds someday. I want to have him on the channel. So The Big Short has become a cult classic movie against finance guys. Of course, we all know how the story ends, so there's no suspense. Instead, the movie is a tale of hubris and downfall of a bunch of smug guys in suits. Meanwhile, our heroes are the handful of Wall Street misfits who figured things out, bet on the inevitable, and questioned their own sanity as the rest of the world ignored them and even laughed at them. One of my favorite scenes is when the CDS buyers walk into the American Securitization Forum, and the storyline throughout this scene relates to how everyone at the conference is confident yet oblivious to the fact that they're all going to be run over. Meanwhile, our CDS buyers laugh amongst themselves as they know what's coming. As outsiders, they get the joke and none of the insiders do. So what he's saying is, like, in this movie, like they see the data that the housing market is going to crash, but they're at these events where people are very bullish on the market. They're very bullish on the housing and all these different things, right? And they're not even aware of what is happening at the underneath the hood of the car, right? So let's just say that because banks had all these different mortgages, and these mortgages were given to many people. Many of them were amortized loans. Many of them were people that weren't creditworthy, and there were a lot of defaults happening. And so these people looked under the hood at the bonds that the government or that these financial institutions were selling, and pretty much saw that there was a big issue here. So this is what he's comparing this to, right? I felt similarly last week as I roamed around the World Nuclear Association conference in London. It felt like I was attending the Bigger Short conference. Out of approximately 750 industry attendees, maybe a dozen of us got the joke, and we were all finance guys. The industry guys seemed oblivious to the potential squeeze on supply, just like there had never been a nationwide housing crash during the era of securitizations. There had never been a structural deficit in the lives of these attendees. Since it hadn't happened before, no one had thought through the ultimate ramifications. In fact, most of the attendees were functionally short uranium. So you had people at this conference that was short uranium, meaning that they were betting against the uranium price and getting shorter by consuming inventories, leading inventories, or even selling down inventories. Meanwhile, those with contract coverage had never even considered counterparty risk until with doing business with funny countries with transport limitations. So this article gets even better. He highlights some great points. And so he talks about the story has only gotten better since he's been in the uranium space. He says, I like to look at commodities in terms of supply and demand balances using very rough internal estimates that are likely to be directionally correct, if numerically incorrect. And he says he believes that in 2024, primary supply of uranium will be 150 million pounds, and secondary supply will be 10 million pounds for a total of 160 million pounds. Meanwhile, primary demand will be 190 million pounds. Initial fuel loadings will be 15 million pounds. This is the amount of pounds that have to be fueled into the reactors. And overfeeding will require an additional 5 million pounds for a total demand of 210 million pounds. So you can see that there's a 50 million pound deficit. He's saying that he knows that he may likely be off a few million pounds in this estimate, but he's saying that everyone is pretty much saying that the deficit will be between 40 and 60 million pounds, which means that the price of uranium is going to go higher. And he's saying like, but this is only if things go perfectly as explained, right? As he's explaining it. So let's see. I got a couple people watching. What's up, JT? Hey, my sister jumped on. What's up, Trina? I'm talking about uranium, which is nuclear fuel energy, and we have some investors on this show that actually invest in this, and we're planning to make a lot of money off of this. That's what we're talking about. But tune in, stay tuned in. We can have a conversation. I can go through the supply. I can go through all the fundamentals with you on the phone, though. But appreciate you tapping in, sister. That's my bio sister. She used to raise me, change my diapers and stuff, y'all, if y'all didn't know that. JT, what's up, man? Good to see you. Good to see you. All right. So he's saying, so this is only if this is perfectly carried out, right? He says, of course, this all assumes that Cameco hits their targets after guiding down production for 2023. Cameco pretty much say that they're going to be 1 million pounds short or something of that nature. And then he says Kazatomprom hits their targets despite extreme difficulty in hitting production targets for a number of years, and that Niger gets its blank in order, which, as we know, that there was a coup in Niger where they overthrew the government, and it pretty much impacts the mining operations out there, and they make up about 4% of the world's supply. And then he says, like, that no other mines have technical issues. This assumes no government stockpiling, and more importantly, no investment demand that permanently sequesters pounds, despite investment demand by SPUT, which is the Sprott Uranium Trust and Yellow Cake, who have been buying pounds, physical pounds, taking it off the market, which is pretty much squeezing the supply issue, making it even more tough for demand to get service, right? And he says that more reactors don't get lifetime extensions or permissions to restart. So, for example, Japan just restarted their reactors. I mean, you had, in California, Newsom was trying to take off, I think it was Diablo Canyon, and he ended up canceling that, right? So those are like restarts, and things like that. And he's saying like that they don't, and assuming that they don't get lifetime extensions. So that means if the reactors that are currently built, they're supposed to last for a certain amount of time, but they can extend the lifetime of them. So as you can see, the deficit is large and the risk is growing much larger. The deficits could expand for at least a number of years into the future as additional reactors come online and overfeeding becomes a bigger source of demand, while new mines take a while to finally start up. So new mines are not starting up, right? It takes a while, it takes legislation, it takes funding. He talks about in this interview with Mike that he was talking to some of the junior miners, and the junior miners were saying like, hey, we can't get the financing to start up, and then they can't get the licenses. And so that's going to take a while. That takes years for that to start up. And right now we're already in a squeeze. And so he talks about here just how the pretty much the deficit started in 2019. And I want to get to the part where he talked about the utilities who were sleeping at the wheel. So he says, I think this is here. He says, these pounds have bridged the gap, but they're not exhaustible. In fact, it seems that the era of excess mobile pounds may be ending, and many at the conference seemed interested in increasing their inventory levels. Others complained about how it was becoming harder to source pounds from stable countries and how various loans needed to be extended as the pounds weren't available to unwind them. Yet, despite all this evidence of a rapidly tightening market, most conference attendees were nonchalant about the future direction of pricing. And so that's why he's saying that the fuel buyers are asleep. So these are the utility companies that have to come in and buy the uranium, right? And so they weren't, and he had multiple conversations with them at the Nuclear Association. Like he put out the numbers and everything, right? And then people were still like just not seeming unconcerned. And what Mike talked about in the interview that he had with him was that they're going to pay the price no matter what it is. They're going to, if uranium's at $130 a pound, they're going to pay the price. So it doesn't really matter, whether it's here or there, but they should want to get it cheaper. So some good stuff, right? We're getting insights to the World Nuclear Association Symposium, indirectly. So this is cool. This situation is substantially different. When I initially put my uranium trade on at the time, I thought that the trade was mostly about SPUT taking advantage of small deficit to corner the market, which we all did. We talked, well, not we all, but a lot of us talked about Sprott coming in and buying physical uranium. Now with my estimates showing deficits running at nearly 1 million pounds a week in 2024, SPUT is barely even rounding error to the overall balances, right? Rather, the trade is about the fact that an industry cannot function for long when deficits are running at a third of total supply. Oddly, in the uranium world, since there isn't really a liquid market for financial speculators to achieve price discovery without taking delivery, we haven't seen much more than a slow grind higher in the uranium market. This is simply a nature. He's talking about miners restarting and such, but pretty much, I mean, he says like people at the symposium were not we're not pretty much awakened to the issue that's coming down the line. And so this is similar to the Big Short, where the people that were so bullish on the housing market was not aware of the issues that were coming online with the housing market that were underlying. And so yeah, I mean, pretty much, I mean, this is what it is. All right. And then he says a really profound quote at the end. He says, let's just say I'm far more bullish today than I was last week before the conference. That has to say a lot right there. Yeah, I'm already bullish. And then just reading his article and watching the interview he had with Mike, that even made me more bullish. It's Mike Alkin. That's who he interviewed. So I encourage you all to check that up. I did share it on my Twitter. Be sure to follow me at Twitter, on Twitter or on X at Money Level Show. All right. So we're going to jump into this other article really quick. We didn't finish reading this article last time. We kind of dipped our toe in it a little bit, and then we're coming back to it though. But this is Sprott, and Sprott is talking about the supply demand estimates. And so this is from 2022 to 2040, based off, how much is being mined and how much is coming to market. I mean, you have a lot of different factors that are at play right here. So just a second, you all, just a second. All right, I'm back. Sorry about that, y'all. Sorry for the break in action, but I should have put on a commercial while I was gone, huh? That's what I should have did. I'm making some commercials and stuff, so I'll be sure to do that next time. So as we can see, Sprott, the supply demand 2040. They're saying like a supply gap of likely of 1.5 billion pounds. So more investment has to come into this space. Uranium makes up, I believe, 20% of the United States energy, 10% of the global energy. So that is something that's very important. Here they talk about utilities. They have some other good charts. This is a cool little fact they put out. A gummy bear size pellet of uranium has the same amount of energy as 3 barrels of oil, 1 ton of coal, and 17,000 cubic feet of natural gas. And we're talking about these climate change goals and all these things, right? This seems like it makes the most sense. You even have governments changing laws and passing laws to be able to pretty much bring more of this online. So then you have a chart of the the bull markets, the bull and the bear markets, I would say, which was cool because you get a little bit of history of what was happening with uranium since it was discovered relatively late in history. And so you see the NRC was established in 1974. You had that first bull market where it went up 629% over 5.3 years. 1986, you had the explosion at Chernobyl. You had the huge bear market, right? Then you had the 1979. I mean, you had the partial meltdown at 3 Mile Island as well. So you went to that huge bear market, and then you get the Cold War ends. So you have more global trade, right? Then you have the commodity super cycle awakens, and you have major banks dumping commodities and such. I mean, you had that was at the top here. So, like whenever supply is just beaten up, I mean, supply is abundant and demand is just beaten up over those years, right? And then supply dwindles down, you get these price shocks. And so here right now we're in the bull market since 2016 to August of 2023, and we're only up 246%. So I mean, if we're looking at the 2000 or 2007, like we got a long way to go. 1800%. All right. So you're still early. I don't know, I this isn't financial advice, but I'm investing more capital because I know this is going to be life changing. And so I have a strong conviction about this. I mean, many of my viewers do as well. But this is just beginning, and people can still get in and make a lot of money. This isn't financial advice. If you're interested in what stocks I hold, I'll be willing to share those. If you just send me a message or whatnot. But yeah, that's where I'm at. And I also have videos on my channel with Rick Rule explaining the stocks that he invests in, uranium stocks, some of them. We also did a stock analysis on uranium royalty and things of that nature. So, and I've had Justin Hune on as well. We've mentioned a few stock picks as well. So there are multiple videos on my channel about uranium. So be sure to check those out. I have to get going. The kids in here acting up and stuff. So I gotta I gotta get dipping out. That's what JT said, a commercial. Send me a commercial, JT. I need about a 3-minute commercial if I need to take a break, about JT coin rings, how we can store purchasing power through having precious metals on around our fingers. So be sure to send me a commercial for that, man. I need about 2-3 minutes. 2-3 minutes. All right. These kids was acting up. I had to go respond to that crisis situation, but it is what it is, right? All right, y'all. Y'all take it easy. Y'all have a blessed day. I appreciate you all tuning in today. Be sure to be on the lookout for more videos I have coming on uranium and nuclear energy. And yeah, let's build the wealth of a lifetime. Because this is serious, y'all. This is very serious, and I didn't want to be all super jokey about this one. Like, even though I'm excited about it, but like I know that a lot of excitement can be misconstrued for just overhype. But the fundamentals on this commodity is it's so great that I just think that we're gonna build the wealth of a lifetime in this sector. So, all right, y'all. Y'all take peace. Y'all peace out. And take care. All right.